And we are live with another episode of Punch Card Investing. We're missing Kron today, which is a shame. We always try to get our 5 here, but it's hard to coordinate 5 schedules all around the world, but you got to do what you got to do. Speaking of you got to do what you got to do, we have to congratulate Frank on some wonderful news. Last week, he got engaged. Let's give him a round of applause. Any idea when the wedding's going to be, Frank?
The coronavirus is putting that off for a while, so
no idea. But well,
we're just leaving it open for now.
But big congrats. That's why Frank was out last week. But I guess he's in for the long haul now, right? So it shouldn't be any more weeks after this. But congratulations there. I don't know how to transition into our topic for this week, but we got a lot of news coming out of China right now. Whether it be Evergrande, crackdowns on big tech, Alibaba, all sorts of crazy things happening all at once. Maybe it's just because the media is putting their magnifying glass on it all of a sudden, but who knows? Either way, there's a lot to talk about. Definitely, we see we got a pretty active chat going already with questions, and we'll do our best to get to those. But before we get into that, be sure to smash the like button. And if you get any sort of value out of this content and you want to see more of it, speaking of seeing more of it, be sure to subscribe because we put out a new video every single week and wouldn't want you guys to miss out on that either. Anyways, let's get into China. We've seen a lot of questions about Alibaba, so maybe we should start there. I guess that's sort of old news compared to maybe the newer Evergrande stuff that's coming out. Why don't we start with Alibaba? We saw like the Alipay news recently and kind of the crackdown there. Lots of little things there. Anyone want to start with Alibaba?
Yeah, I can tackle the Alipay thing if you want.
Go for it, Frank.
So essentially the news was, and it was kind of unclear. We don't know exactly what's taking place. We just know that the CCP want to break up Ant Group, specifically the loans business or the credit business from Ant Group, which was, the numbers are private, but it's about 50% or slightly more of Ant Group's revenue. So it's definitely going to hurt Ant Group overall. But I'm kind of under the opinion that it doesn't affect Alibaba too much. Firstly, being that they own a third of their Ant Group business, but it's a tiny part of the value of Alibaba. So estimations from analysts when they were originally going to list was that it was a $300 billion company, which means for Alibaba, that was $100 billion for their 1/3 stake, which is great. But since the original crackdown, where they required the credit business to hold 30% of loans on the balance sheet, the value dropped significantly. They had to change some of the way the company was operating and everything else. So it dropped down in value dramatically. And then analysts had it at around 100 to 120 billion. So $30 billion of value, or 40 billion for Alibaba, which is very insignificant compared to even the current market cap that is probably low at the moment. So in my opinion, it's like, yes, it's going to hurt Ant Group. There's half of the business that will be fine. The rest, the credit business that was probably going to be the fastest growing aspect, has already been hurt in the past. It's hurt even more now. But as for Alibaba, I don't think it makes a big impact.
Is that just because it has so many different other businesses that are also catalysts for growth, mainly like Ali Cloud, or what's it called, their cloud service, and that kind of overshadows maybe losing this potential catalyst? Is that really it? Just kind of their broad diversity of businesses they have?
Yeah, I think the Ant Group is just free upside. No matter what happens, it just comes for free. If you think the e-commerce business is worth the market cap, which I do, I think it's probably worth more. I think all the Alibaba Cloud, all the external small businesses and Ant Group and everything else all comes for free. So realistically, it shouldn't matter too much what happens to those businesses, assuming the e-commerce business continues to grow like it has, which it'll slow down, obviously, just because of the size it's reached. I'd be more concerned about the cloud business rather than Ant Group. But either way, I think it's still just ridiculously cheap at the moment.
Are any of you concerned that it would lead to, or like this is the first domino of many, or maybe the second, third, or fourth domino of many.
18th domino.
Yeah, right. Exactly. This is coming off the heels of the education crackdown and many other crackdowns before that. Dare I say crypto crackdowns? But like, is this just kind of another check in the box, or kind of does this raise any sort of alarms for any of you guys for future crackdowns?
Well, the place I'm starting to get to with Alibaba is, I mean, similar to what Frank said. When I did some valuation work on Alibaba, it was really just focusing on the e-commerce business almost solely. Like I was not paying any attention more or less to Ant Group or even the growth from the cloud. I just kind of put it in the too hard basket because I think it's sort of like it could turn out to be very significant, but it's just kind of too hard to quantify at the moment right now. So I think for me, Alibaba's kind of at the point where, like Frank said, the e-commerce business I think is worth substantially more than the market cap on its own. So although there's a lot of negativity around it right now, I think there's a fair bit of margin of safety baked in, and it's getting increasingly so as the price continues to go down.
Yeah,
go for it, Brad.
It certainly seems like the market thinks there's a lot more dominoes coming, right? That's why everyone's fleeing this thing, which is why the price is tanking. I've been wondering, like, have you guys read any thoughtful write-ups from investors in China that live in China about Alibaba?
I don't think so.
Yeah, it's really interesting. Like, I haven't, to answer your question, but the people that I've listened to that are, I guess, closest to China or understand these businesses quite well, I don't think they have huge conviction either way around what regulation's going to look like. I think it's interesting to see a lot of like international investors convinced that they know what Xi Jinping's going to do, but a lot of people actually in China don't seem to have that opinion. So like, I'm sort of getting to the place now where I'm like, things would have to go very wrong with Alibaba's e-commerce business for it not to be undervalued right now. I think the bit you kind of have to get comfortable with is still the VIE structure, which has been a discussion point forever with Alibaba, and whether there's going to be ongoing donations or whatever you want to call them, and whether Alibaba are actually going to be allowed to return any capital to shareholders ever. Kind of the two things I think you need to get past. And if you can get past those things, for me, it looks obscenely cheap, but I don't know what you guys think about that.
But it sounds like that even with those concerns, you said the margin of safety is increasing, which implies that the intrinsic value that you value it at isn't changing, even with the news, or is hardly changing. It's negligible compared to the amount it's going down. Is that a fair take?
Well, it's hardly a good thing for intrinsic value, I guess, but it hasn't moved the needle enough to break the investment case, in my view.
Sure. Because the investment case was always centered around e-commerce, and e-commerce seems like it hasn't really been touched, unless you could kind of factor in the donation, the cash contribution to the government as a sort of penalty against e-commerce, or just the whole business.
You're talking about the Common Prosperity Program,
right?
Yeah. I mean, it's like it's sort of like you were able to buy $1 for, I don't know, 60 cents previously, and now maybe you buy 95 cents for 60 cents, and that's kind of how I'm looking at it.
Sure.
And the initial, I think this is worth $1. There were those like potential kickers and like moonshots built in with the cloud business and Ant Group that meant it might not be worth $1. Maybe it's worth $1.50 or $2 or something, depending on how those things go. That's how I'm thinking about it anyway.
Yep. Curious if any of you have been to China. I have not been to China.
No.
Nobody. Okay.
No, I haven't. And I see we've got a couple of questions around like smaller cap Chinese businesses. And I think that's why I put a lot of those just in the too risky or too hard to understand basket. I think if you're playing in the mega cap space with Alibaba, with very well-known businesses, I think that's much easier to get your head around than some of the smaller names.
I guess I should, to that, like, have you guys been to the US? I know, Brad, you live here, but Tom and Frank, have you guys been to the US? You invest in US companies?
No, I'm hoping to get to a Berkshire meeting at some point, but we'll see how COVID and all that goes.
Yeah.
How about you, Frank?
No, I've never left Australia, unfortunately.
Wow.
Never left.
Well, you need to get over here. Come over here for your honeymoon. I'll take you guys fishing or something.
It's about the only place we can go at this point. But
have you been to Tasmania?
No, I haven't.
Wow.
Not many Australians really head down there.
Frank, I've been to Tasmania.
More of an Australian than I am.
Twice.
But yeah, as for the intrinsic value of the business, like you said, Jack, compared to how much the share price is down, let's say if you completely remove Alipay and say it's also not Alipay, the Ant Group, and say it's worth nothing now, that's maybe 5% of the intrinsic value that's taken away, which isn't the case because it's still partly there. Then you take some of these, like some of the donations or whatever that's going to happen moving forward, and that takes away from earnings slightly, maybe another few percent down. So even if we've lost 10% of the intrinsic value, the share price is down, 40%, maybe more from the all-time highs, when even then it might have already been discounted. So I think the market reaction has been well overblown.
Yeah, I think there's some real risks or uncertainty at least, but you're getting paid to take the bet. Like the odds are getting better and better, right?
So then are you doubling down? Are you putting more into the BABA positions you guys have? I have held off for a moment. So especially with the Evergrande thing, it might be a little bit too macro focused, but I'm also focusing on other investments as it is. Are you guys doubling down if you feel that way?
You guys can go first. I'm just pulling up my recent transactions.
I have not added more to Alibaba since I bought. I think it was 227 when I bought with Charlie. Yeah, it was a kind of a full position up front, and I kind of my approach with these things is if it's not clear what to do, don't do anything. And so I'm just kind of sitting back, waiting. I definitely feel pulled to act with, the price plummeting. But I'm not in any rush to take action on that.
Mm-hmm. Yeah, I haven't I did add slightly early on, I think around 190. So when it was first kind of starting to decrease. But that was because I sold out of a microcap to actually buy the engagement ring. And I had a small amount of cash left over for that wasn't worth keeping in VRQ Solutions, so I put it into Alibaba. Other than that, I don't typically like to add two positions. I'd rather just do nothing. I kind of build my conviction, enter the position, and then just leave it for hopefully a very long time.
Tom, before we get to you, let's pause there because, this was kind of hilarious. He told us before he told everyone else about the reason you've sold off part of your portfolio. It was just so like anti what you preach about, your long-term positions and like you never want to sell. And then all of a sudden you're selling for a personal need. It's like, wait a second, that's like finance 101. You got to have some emergency cash for this sort of thing. But why don't you explain your rationale there, Frank? Because it was pretty funny.
Putting him on the spot.
I do have like a emergency saving type things, like kind of enough to live off for a year if we were out of work. But of course, I couldn't touch that because then my partner knew that there was money missing. So the only way I could get away with it is selling stocks that she really doesn't pay attention to.
I love it. I love it. Everything made sense all of a sudden when he told us that. I'm like, oh.
And a lot of people did guess it. All through the Discord and comments, I just couldn't even write back because everyone was like, it's got to be a ring. I hope she's not reading these.
It did sound hilarious when you were saying it on the stream. So I was like, someone's going to work this out.
It was so confusing when you first said you did it. I'm like, what? But for a personal thing, like what's going on? Oh, I'm like, I see now. Good stuff. Anyways, Tom, what about you? Have you been adding? Sounds like you have.
Well, I have, but I'll run you through it. So I bought the bulk of my position in the 210s. I've bought as low as 167, but relative to the initial kind of positions, it's not super meaningful. So my cost basis now is like 201, right around 200. And yeah, I'm kind of maxed out in terms of the allocation I'm comfortable with for Alibaba. So I don't see myself adding more unless we get like, a year down the track and some more cash has come in the door or something and it's still down there.
What allocation are you at right now again? Approximately?
Maybe high teens.
Okay.
Yeah.
So that's a fat chunk for sure.
Well, yeah, it really depends how you measure it because I got a like a fairly large house deposits set to the side at the moment. So
sure.
It depends sort of whether you include that or not and some other things, but that's ballpark where it's at.
Sure. Yeah, I wouldn't make that humongous of a difference. Though I don't know, New Zealand home prices are pretty up there. So maybe it does move the needle quite a bit. So then I guess like what's next for Alibaba? What are you guys looking at? Are you just not even fazed by the thought of future crackdowns? Is there a particular crackdown you would look at and be like, all right, this is a big fundamental change? Or just kind of roll with the punches and check back in a few months?
Well, for me, there's really only two things that would like actually make a difference in how I view Alibaba. Like, we've talked about Ant Group moving the needle a little bit, but maybe not super substantially. So unless there's some fundamental change in the core e-commerce business or a crackdown on the VIE structure would certainly be one that would concern me. Or whether there's these like, common prosperity donations that just get blown out of control. Those are the things that I would really pay attention to. But I mean, the underlying business is cranking with e-commerce. Like there's not much to complain about if you actually look at the numbers there.
I would kind of be concerned if the cloud business kind of got taken away from it. I think that's what really got me over the hurdle rate to make the investment. I think the business alone, so that's pretty much all e-commerce at this point. I think it's 80 to 85% of revenues comes from the e-commerce. So that's driving everything at the moment. My assumptions on growth there is around that, say, 12 to 15% mark over the next 5 years. What gets it over is the cloud business, which could be really drive those trends towards the 20% mark, which my hurdle rate being 15%. So if that was significantly hurt, and there are rumors about these crackdowns and things moving forward, and the Chinese government having their own kind of cloud business moving forward, if that was really hurt, I could consider maybe partially exiting the position, or if there was a better opportunity, I may consider it. I also have a lot of exposure into China at the moment with Tencent and Process as well. So it would really depend on which business was being hurt the most, and if there was better opportunities at the end of the day.
Fair enough. Brad?
Yeah, honestly, I've been paying as little attention as possible to Alibaba for the last couple of months. People keep pinging me about it. It's like, it's still going down. It's starting to hurt. I can't stomach it. And I'm like, I haven't looked. And I think that's probably what I'll continue to do, at least in the near term. So
first in, last out.
That's it. Yep.
Yeah. I mean, if you can't stomach the odd position being down 50%, you probably shouldn't be buying individual stocks.
That is also true. Especially talking about we're talking 6 months ish. We're not even talking about like many years of this or something like that. So
yeah,
that's part of the game. You're going to get violent swings, even in big stocks.
Yeah, and I've said it on previous Alibaba questions and streams before, but I mean, if you're a genuine long-term owner of Alibaba, like the price going down is great for you. They're buying back, they're putting a lot of cash towards buying back shares, and if the price is lower, then that cash buys back more shares, and you own a larger chunk of the business than you would otherwise. So, is what it is.
Long-term time horizons will help. Someone in the chat, Dark Knight, here was asking about Baba divesting from Mango TV network. I guess they're exiting positions from multiple media companies. Do you guys know anything about that? there's so many elements to Alibaba to break down. This is just one of many. But any thoughts on that?
I've only heard about this through the odd tweet here and there, so I know very little. I don't know how much they even had invested, so whatever that 5% stake is worth, I'd say is very insignificant.
Yeah.
So I'm not too
concerned
not there at all.
Much, I'd imagine. Yeah.
Yeah, I'm just pulling up. Their 2020 revenue was $400 million US dollars, so it's a drop in the bucket, I would say.
Yeah, it's kind of nuts that's a drop in the bucket for anything. But that's how huge
I don't know a lot about it either.
Same.
I wonder if I doubt it's a regulatory crackdown or like, some pressure. Or maybe it's to raise some cash, given that they're about to lose a bunch or something like that. I don't know. You could say a lot of things with a position of that size.
I've noticed it seems like the big news coming out of China, at least with the major YouTubers that I follow, is the whole Evergrande situation. Do you guys want to touch on that at all? Jack, that's kind of your wheelhouse, right? Real estate.
To Chinese real estate? Well, I don't know.
Probably not Chinese real estate.
They lend money for houses. Jack must know everything.
Yeah. Well, if you guys haven't heard, if you've been living under a rock for the last week, which I mean, it's possible, we're getting a lot of news very quickly about this issue with Evergrande, but they're the second largest developer in China and also the most indebted developer in the entire world, with something like $300 billion in debt, which is mind-boggling for real estate development. And so that's their shtick. I think they have like 500,000 parking spaces, or and a bunch of different real estate, because China itself has had a massive real estate boom over the last couple decades. Partly because the country's been growing so fast, but also a lot of speculative demand too, which Evergrande, being the size that it is, was not safe from, and definitely dove into some speculative type stuff. But they financed so much of it with debt, and the reason this is really becoming a problem is because I forget when exactly, but at least a few years ago, China instituted, it might have been a few years ago, but pretty recently, China instituted some rules against having a lot of debt on your balance sheet. Essentially, if you have a certain percentage of debt, you need to find a way to get that percentage down, which triggered Evergrande to start selling off a lot of its higher valued real estate holdings. But in doing that, because they're so huge, they're releasing all this supply into circulation, and that's going to lower prices. And it kind of creates the spiral effect of trying to sell off the properties to pay down the debt and keep your debt ratio lower. But the thing is, now your property values are going down, but your debt is like kind of going in line with it. So you're not really making any progress. And now that they've kind of run out of really high quality assets to sell compared to the debt load, they're in big trouble. And as of today, they just not defaulted, but they did not pay a coupon payment to a foreign bond that was due today. They have a 30-day grace period to figure out some sort of restructure or find the cash to pay it, or beg for mercy from the Chinese government or Chinese banks or their own employees they've been asking for loans. Fact of the matter is, it is a massive debt crisis. People are comparing it to the Lehman of China, like the Lehman Brothers crisis back in 2008, when Lehman defaulted on like $600 billion in debt, or they went bankrupt on $600 billion in debt or something crazy like that. So not as big as Lehman, but still $300 billion is nothing to scoff at. That is a massive amount of money. And it's so tied to the Chinese real estate market in general, which is at like 20% of their GDP over the last few years, which is like a huge portion of their entire economy is in real estate. So just to get to the final point here is they are defaulting on their debt. The Chinese government is saying that the Chinese central bank is saying that they're not going to be bailing them out. They're going to let it happen and then clean up the mess afterward. And that's what's kind of throwing everyone in a loop. It's, oh no, where's the government to bail us out? Because it's not just isolated to China. There are foreign overseas debt holders who are affected by Evergrande. And even if there weren't, being such a large part of the Chinese economy, when the Chinese economy does poorly, that's going to affect large parts of the world too, since the world is so globalized. That's kind of a 50,000 foot view of what's going on here with Evergrande. Lots of debt, and it's looking like they're not going to be able to pay it off, and they're in a very, very, very difficult spot that it doesn't look like it's going to get any better without some sort of government bailout or some sort of bailout from someone. So that's what we got there, and that's been causing some pullbacks in all of the markets pretty much. Not huge, since there's still a lot of uncertainty on what's actually going to happen, but definitely cause for concern.
Wonder if Warren's interested in doing any bailouts in China.
Yeah.
He'd probably need to band together with a few friends, I'd imagine, to make that one happen.
But I mean, he didn't really do that he like semi bailed out Bank of America, but that was like post housing crash. And that was really the whole bank. This being a real estate developer, you'd be like super exposed to Chinese real estate. And I mean, there are a lot of problems with how the real estate market in China is, at least from my limited understanding, has kind of been run, in that there's a lot of speculation. It shades of like the 2008 frenzy, or what the lead up to the 2008 crash, where you had people buying second homes and then never even setting foot in them, not renting them out, just waiting for appreciation. You've been seeing a good bit of that in China. There's also a huge central planning element to it, which is unlike the US, where the government will, it will incentivize and create cities out of thin air, it seems like. And if you don't fill those cities, you got all this extra real estate lying around, and now what are you going to do? And that's Evergrande is trying to dump its real estate to some of its debt holders, saying like, hey, we can't pay you in cash, but here's our finished or half finished properties to take as payment. So it's like, can I offer you some worthless real estate in these trying times? Like something like that. And the Chinese real estate market there's so much that we don't know, or at least that I don't know as a US based guy who hasn't been paying too much attention to it, but just outside looking in, it looks tremendously overbuilt. And when you have a player as big as Evergrande exposed to it, they're going to be affected by that overbuilding at some point if they have all this debt on their balance sheet and can't weather that storm. And it seems to be exactly what's happening. And with no bailout in sight yet, the big question is whether the Chinese government will actually bail them out in some way. But they're saying they won't, and we'll see. That definitely cause a big ripple in their entire economy.
Yeah. So I'll start by saying I have very little understanding about the Evergrande situation at all. So the one thing that jumps to my mind is that kind of everything coming out of China at the moment, all the Western media is very overcritical with every little thing. So I think the impact to the broader market, of course, is going to have an impact within China, particularly within real estate in China, and of course the Evergrande business. But to the rest of the global markets, I think it's being blown out of proportion. Again, that's coming from a very little understanding of what's taking place. I know a lot of the bond holders for Evergrande, like a large portion of that 300 billion, is made up from some of the biggest companies in the world. Like I think BlackRock was one of the largest bond holders, and it makes up like 0.001% of their assets under management. So it's not going to impact them whatsoever. But yeah, I don't have any valuable insights other than I think it's probably being blown out of proportion on the global perspective anyway.
It could be. The counter to it is that real estate is so fundamental to the Chinese economy and also the global commodities market too. China's been using so many resources to construct all these buildings. And if that suddenly is gone awry, you could get some trickle effects that might be hard to see right now, but could be really substantial later on. But though I guess I could help a lot of companies too if commodity prices lower for once and you get lower input costs. So it depends on your exposure, of course, but there's going to be a ripple effect, I'd imagine, if a pretty substantial one, even if they don't hold the debt directly.
So you might know the answer to this, Jack. I think real estate in China, as of their GDP, is about 30% or somewhere.
Yeah, it's like 20 to 30% over the.
What's the difference in the US? I have literally no idea.
That's a good question. Let me actually check that. US real estate as percentage of GDP. I meant to actually look that up after I heard that stat. So this is saying, well, this is saying finance, insurance, real estate, rental, and leasing is 22%, but that sounds like a lot of things in one. Trying to see a better example.
So probably significantly less.
Here we go.
China.
Real estate in 2018. So this just is a benchmark according to the balance. Real estate construction contributed about 6.2% of the U.S. GDP. So we'll call it a third of what's going on in China. Because China's in a different spot than where the U.S. was a few years ago, because it's rapidly developing in a lot of places. So you would expect to see some of that, like a lot more outsized development as part of GDP. But it doesn't negate the fact that it's an integral part of their economy right now. You got to imagine how many jobs it provides. Also opportunities, improvements in quality of life. Lots of things come with that sort of scale of development in a country of that size.
Cool. So we're about halfway through. Should we jump into some comments here?
Yeah, might as well.
If we go back up to the top, there's one from Jesse I want to point out. He says, aside from value line, have you been able to find an S&P 500 guide like the Moody's manual, but for 2021? I don't know when the Moody's manuals became discontinued, but I don't think there's anything like that today. Have you guys seen anything?
No, I was actually, I don't know if he's in the chat or not, but I was just talking to Jason from After Dinner Investor about Value Line yesterday, actually. So that's the only one I know about.
Mm-hmm.
I guess I don't actually know what the Moody's manual was actually looked like and what kind of information it had, but I would assume that this amount of time later, something like a ticker would provide you with a lot more information than probably what Buffett was reading. Like from memory, I think it's like a half page of each company in S&P 500. So I think the amount of information you have on most services online would be a lot more than the Moody's manual anyway.
Absolutely.
Don't you have one, Brett?
I do.
I dream that.
It's upstairs. It's
yeah,
like
go grab it.
Yeah, I will.
Okay, he's off. I was joking, but that's right. I was talking to Frank this morning actually, and I just watched a Lee Lu lecture from 2006. He did at Columbia, and he was rocking the Moody's manual and talked through a couple of very successful investments he tracked down in there. It was quite cool. He was like, you get a one pager on a company within a few seconds. You get some basic stats and can figure out whether it's cheap or not and kind of move on.
Well, you can kind of do that with dare I say, like a Yahoo Finance. Like you get pretty far if we're just looking for like very high level basic, get a feel, and then do your further research after that. There's so much information out there.
The best convenience of something like that would be just to be able to flick through page by page every single company.
There is value in that for sure.
With something like Yahoo Finance or Ticker or QuickFS or anything else that provides you with that information, you kind of have to think about a ticker from somewhere else and then go and search it.
Yeah. It's not as good for deal sourcing. Yeah. All right, he's back.
So here it is.
There she blows.
1957 Transportation Manual. So it's only transportation companies. And
where did you get that?
It's about 2,000 pages.
Wow.
It's actually kind of awesome.
And there's like 6 companies on each page. So it just gives...
Can you show us a page here? I'll enlarge you, maybe.
Have you found any like PE ones in there you might buy, or price might have gone up since then?
That's what a page looks like.
It looks like an encyclopedia. That's crazy.
It's like a boring phone book or something.
Yeah,
you got to imagine Warren had like binoculars on or something. I mean, such fine print.
So. Yeah, he would have been over the page with his monocular. Like
that's it. Yep, the monocle.
Mm-hmm. I'm sure our extremely niche audience is getting a kick out of this. But if you showed this and like the average person, they'd be like, "What is wrong with you guys?"
Yes,
getting excited about
me.
this.
Yeah.
All right, good deal.
Yep.
I think we answered the question, sort of.
Sure.
As for resources, oh, sorry, go ahead with the question.
No, go ahead, Frank.
Just the resources. I was watching your video the other day, Brad, or yesterday, today it might have been even, with the shareholder letters for every fund that you come across.
That was
what was that called? That's a great resource.
Vintage value investing.
That's the one.
Yep.
That's super a great fund.
Yeah.
So definitely worth checking out for anyone that
hasn't. That's just like a blog or like, what is it?
It's a website, and every quarter he goes through and he puts up all the letters to investors from as many funds as he can get access to those for. And what he's been doing lately, if you scroll down, let's see, is there a way you can click on the quarterly hedge fund letters? If you go to the top, it's, So scroll down, just click on Q2. Yeah. So scroll down, you can see this is just new for this last quarter, stocks mentioned. Okay, so he's going through and he's pulling out, stocks that these investors are talking about within the letters to shareholders.
Gosh, this
basically a write-up for each of these companies.
This has to take a while to compile. My goodness.
So what I did, I did a video for Prosus, and I went here and I just did Control F and I searched for Prosus, and there was one in there. So I think it's fantastic.
Yeah, that's awesome.
You see NVR there for black, whatever.
God, look how many there are. My goodness.
Dizzying.
That's a lot of reading. Good find. How did you find that? Or did someone tell you about it?
How did I find it? I was searching for letters to investors, doing my research for the performance, right? I was doing a performance spreadsheet for which investors might be worth cloning. And I stumbled across this.
Nice. It was. Yeah, I was thinking you found it while you were doing your research in Turkey or something.
No,
when you were on your trip there, checking out races.
right.
No. Good deal. Yeah, that was a good one. Vintage value investing. Aaron here, Aaron asks, how far would the CCP need to go with their crackdowns for you to think that investing in China isn't worth the risk? Is there a line in the sand? I guess everyone should have some sort of line in the sand. Where is it?
Yeah, it's taking a really meaningful amount of the annual earnings and donations or whatever, or crackdown.
So more or less taxes
structure for me. Yeah,
taxes and then VAE for Alibaba. That's fair.
Yeah, at a certain point, like if the business doesn't get to hang on to any of its cash flows, it's not worth anything. Right, so there's sort of the two things I'm focusing on.
Yeah, meaningfully crippling the business. It's hard to define that super clearly, but I think when you see it.
Yeah, there's lots of different things they could really do that could destroy the business.
Yeah.
I guess the difference between a communist country like China and the US, because the US have their own crackdowns on their tech companies as well, and it's a needed thing for a country to do before they get out of control. China, as a communist country, can just do it very quickly. So what happens in 5 or 10 years in the US might happen in 1 or 2 in China. So things move very quickly, and that's kind of been happening over the past probably 3 or 4 years, to be honest. It's kind of been brought mostly to people's attention over the last 6 months and probably has ramped up.
Yeah.
But yeah, overall, I think it's going to happen. It's going to happen quickly. I think that's part of the waiting in a position in China, no matter what. I think it would be pretty unlikely that they would take it too far, that I don't think it would be worth investing in China at all. I think it's just finding the right opportunities, as with any other market in the world, really.
Would delisting be one of those fundamental things? I know we've talked about it before, that it would just kind of be almost a good thing for a long-term investor, because it'd be a negative catalyst in the short term, but it shouldn't affect the business fundamentally, one would think. Would that be on that list at all? If suddenly, say, all U.S. investors can't, or like Chinese companies can't come to the U.S. markets or whatever markets or whatever, something like that.
Well, yeah, it depends on the specifics. Like if it just trades over the counter, I don't know that it changes a huge amount. Yeah, if there's some rule that there's like literally no way overseas investors can own Chinese stocks, which is sort of getting at the VAE thing, and that's a very important development.
Yeah, that's true.
Yeah, I'd want to know the details of why it was delisted, right? Is it Alibaba not being willing to work with the SEC? Because that could indicate, things down the pike for foreign investors.
That's a good point.
Yeah.
Yeah, and I think they've got 3 years grace from memory to kind of figure out what they have to do to comply with, whatever they need to do to list in the US. And they seem to be indicating that they'll do everything they need to get there.
Maybe that's why they're dumping some of these holdings. Getting rid of bad eggs, perhaps. No,
I don't know.
But again, I don't think that would be a reason not to invest in China at all. I guess it would still just be different opportunities. Like, of course, it would hurt Alibaba at the time. Share price would be affected, but I don't think that's a reason to avoid investing in one of the fastest growing markets in the world, and probably will be for a while yet anyway.
Yeah. I think
I might just be saying this because I've been binging Lilu talks and stuff recently, but I can't think of a better time if you ever wanted to invest in like Lilu's fund, there's probably not many better times than right now, considering he's like the GOAT value investor in China, and there's so much volatility.
What's the minimum buy in there, Tom? You got enough?
No idea. I highly doubt I have enough, but I don't know what the numbers are. I wonder if
anyone
Charlie's
know?
sending him a few million.
Yeah, I actually reached out to Himalaya recently just to try to get some of their performance numbers. I figured it wasn't going to work, but what the heck. And
they flew you out.
No, they sent me a nice email. Didn't say anything about a minimum, so I have no idea. But it looks like they're not always open. We are only open from time to time to select institutional investors, such as endowments, foundations, and family offices. So there you have it.
So you got to be a friend,
basically.
We're all friends of Charlie, aren't we? So that makes us friends
from our perspectives. Yeah,
we talk about him enough, then just kind of like inherently become his friend.
You guys don't have Zoom calls with him?
He loves Zoom. Yeah, I knew that. I know he loves Zoom.
He uses it 3 times a day or something, doesn't he?
Yeah, you're not sure? Like, yeah, he uses it 3 times a day. We just talked about it, Charlie and I.
Oh, well, Tom's in the chat. That's great.
Clayton asks, through all this turmoil, any other Chinese stocks coming up on your radar? Since we're seeing some volatility for sure, but it's kind of affecting the whole market, not really any one sector at the moment, at least with the Evergrande crisis.
Well, you've done some work on a small cap, right, Frank, that Andrew Rosenblum bought?
Not overly. It sits on the watch list, and it's one of those ones I've just looked at the financials and stuff. No detailed work. But yeah, Greentown Management is interesting, but I honestly don't know how much Evergrande affects them. I'd assume being real estate, that would hurt them significantly. I don't know if it creates an opportunity. Again, that's just my limited understanding of real estate in China. Jack, do you have any idea how much that would impact other developers, smaller real estate developers in China?
For how much the Evergrande situation would?
Yeah.
Probably quite a bit, just because they have so much real estate on like, imagine, let's say worst case, they go through like a full liquidation. That is a ton of real estate that's going to be entering the market. And that's just all the supply coming online all of a sudden. So you'd expect a lot of prices to come down or something like that. Plus you got a lot of credit destruction too, which is going to hurt lenders who would lend on property if they didn't lose that money. So I'd imagine it would hurt them quite a bit if worst came to worst, but we'll see what actually happens.
Yeah, over the last 3 months, they're down 33%, at least the stock price. And it's just a steady line down.
It's probably
like everything else we've seen in China. Yeah.
But if there's like a well-capitalized one, it could be an opportunity. Doesn't have that debt burden and can weather this storm. There could be some serious opportunity if it's like there are a lot of companies that weren't bailed out in 2008 and 2008 to 2012 that we're still fine, and look how they've recovered now. So in the turmoil, you can certainly find opportunities. You just have to be very careful, because it's like walking through a minefield during this amount of like debt threats. That's how I would look at it.
Yeah, if you can find a Chinese NVR, it's probably not a bad time to buy one of those things. Don't know if that exists, but
yeah.
Well, I noticed people are talking about Moutai in the chat. Have you guys looked at that at all?
I just pulled the stock chart up just then. It's nowhere near where Hibarai was buying it 5 years ago or whatever it was. It's still like 45 times earnings or something. So.
But those are like the opportunities that could pop up. It's like during this crisis, if you can be on the outskirts of the crisis, that you're not in the eye of the hurricane, maybe you can make it through. I guess the eye is calm, so but that implies that it's rolling through.
Don't go through the eye, Jack. Through the eye.
Yeah, you don't want to be there. It'll be calm before the storm, sort of thing. Anyways.
You guys looked a little bit at JD, haven't you, or not?
I think Tom was, right?
Yeah, a little bit.
Who did I say? Brad?
No.
Yeah, a little bit. I mean, when I was first digging into Alibaba, I sort of had in the back of my mind I might just make a basket bet, kind of recognizing that maybe I couldn't fully get my head around every single company in a whole lot of depth, or one particular company in a whole lot of depth, but maybe the sector is sort of cheap in general. So that's how I'd initially looked at it. I sort of moved a little bit on that to just trying to go deep on Alibaba. And I don't often have like caps on how much I'd invest in a particular country or anything, but I think China is maybe an exception to that. And I think I've pretty much reached the threshold just with Alibaba. So I've pulled back on diving too much deeper into some of those other names.
Cool.
Yeah, I've done kind of the same thing. There's a lot of interesting things. Like I often get pitch stocks here and there, and a lot of them are Chinese companies that are ridiculously cheap. But I'm just kind of avoiding anything in China other than what I already own for now, because it's already 20% of my portfolio, which is a significant amount of risk.
Yeah, it's interesting. Like if these were all US companies, I'd happily have 100% of my portfolio in the US, but there's just big unknowns that come from investing in China.
Well, those companies don't exist in the US because they'd be at 7 million times earnings. The more indebted, the better. So
Clayton just shared two tickers, Douyu, and I don't know the other one he shared, Huya. He said it interesting, but yeah, the esports gaming companies trading at net cash. Douyu was one that I looked at. And again, I kind of just looked to realize it's ridiculously cheap, could be an opportunity, but I don't want any more exposure, so I decided I better stop looking.
Would you chop down like your Baba position and then move it into that, like kind of keeping sort of a China fifth of your portfolio while you maybe move it into a couple things?
Probably. If there was a great opportunity, maybe. It would have to be really, really good. I have like 3 or 4 other names that aren't in China that I'm really interested in. So if I was going to trim anything, probably wouldn't be Alibaba anyway. It'd probably be Kelly Partners. That makes up half my portfolio pretty much.
Yes.
I was just about to say, Frank. I was just about to say you could sell some Baba to lock in some losses to offset selling some KPG and then reallocate to another company.
Yeah. Realistically, I don't want to sell or trim anything unless there's a really great opportunity. So anything's possible, but I don't want to.
No plans to trim the beard either, or
I'll trim the beard when I trim Kelly Partners. I think that's how it works.
And he's going Gandalf mode.
I love the trim the beard when you trim positions. That's a good incentive structure right there.
Yeah, Jack was trading far too frequently.
Yeah. What's that?
Jack's trading far too frequently by the looks of it.
Yeah, I shave every day. Have for years.
I like this one from Matt Hansen. What do you think of Burry announcement of getting subpoenaed by the SEC for GameStop? This would be a good one to have Karan on for. But if you guys looked into this at all, have you been following Burry on Twitter and what's been happening?
I only heard about it. I don't think he's in trouble. It's just the SEC is trying to like tie up any loose ends with the GameStop situation to see what happened, I guess. I think it's more informational from my understanding. Because being subpoenaed just means like you're called to testify. It doesn't mean like you're in trouble necessarily. So it can mean a few things.
Well, I feel like I've heard about him getting warned by the SEC for his comments on inflation and things like that as well.
Yeah, or something like that. Yeah. He's a weird guy. We've talked about him before. He's weird. He's got his hands in a lot of things.
So are we.
Yeah, that's true. We talk about him a lot. So like, what does that make us?
Yeah, it's
weirder.
I think this stuff's kind of ridiculous. Like, like his inflation comments. Like for us, for someone putting out like a long report on a stock, for example, and they think it's going to be 5x or something, if that doesn't work out, there's never any punishment. But if someone puts out a brutal short report or says something about inflation, it's like they get completely different treatment. And I don't short stocks at all, but I think that's kind of unfair, personally.
No, yeah, totally. Yeah, I totally hear where you're coming from. Well, it kind of goes to like, I was going to say like a lot of these like pump groups in like crypto, for example. I get harassed on Discord all the time for like, join this. They literally say like pump and dump group for cryptocurrency. Wow. That's like, okay, we'll let that happen. But then that's totally not okay in stocks. It's like the consistency is just like, it's very bizarre. Right? Same thing with like shorts versus long theses. Why would one be discredited more legally speaking, and the other would be like, it's fine, you're just a positive person. We like positive people. It is strange and doesn't make a whole lot of sense, other than just like a human nature thing that we'd rather be positive than negative, I guess.
Highly irrational.
Yes. Well said. We got so many questions here.
The stream is hot.
We do have super chats now. If
we do.
Really, really good.
I was going to ask about that. Yeah.
We set up super chats, I think. So, I mean, let us know if that's the case. But if you have a question you really want us to get to, definitely do that.
And we never forget our first, guys. First super chat, BFF. Forever.
Yeah, first super chat will be immortalized.
we could make it an NFT or something.
Apparently it's not that hard to create an NFT, so I would be totally down to do that. So,
Jack, you're our NFT guy.
Oh no, I'm not, but I could try. Anyways, let's see.
After dinner, just had a question just pop up. Does any host own both Baba and Tencent or Naspers and Process? And if so, which one do they like better? Well, I do. I think maybe Brad does, and maybe Karan too.
Yep.
Super
chat. First super chat. Clayton,
man.
Clayton, let us immortalize you.
You the man.
Look at Clayton coming in here strong.
Yeah, he didn't even chuck a question either. He just wanted to take the claim.
That is going straight into the punch card investing SPAC when we launched.
Oh, Clayton, I'm sorry.
This will be our initial starting capital to go towards my legal fees and setting up this SPAC. So fantastic.
Awesome.
No,
right,
in all seriousness, that'll go towards like StreamYard fees, because I think this channel makes like $5 a week or something, right? It's not.
I think
maybe
we
a little
like
more
10.
than that, but not.
No, yeah. Well, we've made almost $100 in the last month, so this is like 5% of our monthly revenue. So thank you, Clayton.
Yeah, split between 5 of us, man.
Yeah,
Punch Card Island coming soon.
Fantastic.
Thank you, Clayton.
Should we send Clayton a mug? Just eradicate the profits.
Oh boy, this is going south quick.
Yeah, watch, everyone's gonna send us $3. Give me a mug.
Right.
Maybe we should send Clayton a mug. Anyways, back to After Dinner Investor. Thank you, Clayton. Forever immortalized. We punch card brew to you. Thank you.
As to the question, so which one do I like better? Brad, Karan, and I think all own both, or at least have some exposure to. I think Brad might have Process.
Yes.
Karan, I think, has Process as well. I have Tencent and Process. This is going to be blasphemy in this chat, and most people probably won't like it, but I'm leaning towards Tencent with conviction. I think the returns there are probably higher than Baba, but I think both are great opportunities, of course, why I have them in the portfolio. So if I had to pick and I could only have one, I'd probably keep Tencent in the portfolio.
Do you have more in Tencent than you do in Prosus?
It's pretty much even. It's meant to be a 5% stake each. Yeah.
Okay. Cool.
Nice.
Well, we got after dinner investors menu.
Yeah, chicken wings. Always at it. These Friday night dinners, man, they can be pretty rich.
Luis, we just got another super chat, guys.
Oh, here he is, the legend.
Guys, if you're gonna do a super chat, ask us a question.
He didn't even say anything. What's going on?
Hey, he's just paying it back. It's great.
Well,
thanks, Luis. Appreciate it.
That's the number one fan right there too. I think he's in every single chat.
He's top 5
shows
for sure.
Up. Yeah,
Clayton shows up too. I mean,
you're right.
We got some strong regulars, which always makes these chats lively and great.
The punch card posse.
Yeah,
I like that.
That's gonna be a shirt right there from Kron Shop. By the way, someone was asking about merch. We have our punch card merch. It's over on Kron Shop. That is linked in the description below. So go ahead and check that out after we're done with the stream, of course. We wouldn't want you to click out of here. We need that watch time. So we can get up over $5 a week or $10 a week or whatever it is.
And he doesn't keep any of those profits either. I think he gives it to Managed Provide Charity. Is that right?
Yeah.
Yeah, they go to Darshana.
Nice.
So all for a good cause over on Kron Shop.
Mm-hmm.
Who actually, they recently opened a cricket oval, you may have seen on Managed Provide's Twitter, right?
Yeah,
Darshana. So
Jack's
we're funding the future Indian cricket team, I think.
Field of Dreams,
which is probably bad actually for us, Frank. Nah, they need help at the moment. So
conflicting interest, violating your fiduciary duty to your cricket teams.
Yeah.
Let's get a couple more questions in here. Because we got some good ones. Any that stick out to you guys? Because there are some good ones, but
let's see.
We had a question on like Alibaba liquidation value, which is an interesting question because
I don't know where it is. So let's go ahead and talk about that.
There's not a lot of physical assets. It's not like we're buying a real estate investment trust and that sort of stuff. I'm sure there's certainly some value if you liquidate their headquarter offices and so on. But
warehouse leases.
There's a lot of code, I suppose, in the Alibaba business.
Well, it's logistics. That's really what it is. You're buying a logistical stream, whatever that is valued at.
Yeah, but they're not as sort of vertically integrated with logistics as someone like JD.com.
True, yeah, I remember you're talking about that.
Have quite a capital light model in that space, yeah. So it's just probably not the way to think about valuation with Alibaba, basically.
Well, maybe it's website traffic. However you value that.
It's buying a stream of cash flows.
Inherently that's what any business is, but it's like if they were to liquidate tomorrow and try to sell everything, what's really sellable? And I could see like their websites being sellable. And then any leases they might have. So yeah.
Yeah, but it's not a realistic scenario, I guess.
No,
so
right.
No point worrying about it.
It's more of an exercise.
Yeah.
Yeah, Ryan makes this point. We were kind of talking about it at the start, but the U.S. microscope on China has never been so big. I would tend to agree. I think this maintains clicks for U.S. media companies. Definitely true. I think any country under the U.S. microscope would encounter the same things. That's probably a really fair take because probably about a year ago now, or maybe less, the microscope was on U.S. big tech, and then we had all this regulatory pressure, and it seemed like it was the end of the world for big tech, and they're clicking on all cylinders. Still, nothing really came of it. Now the microscope has shifted towards China, and look what's happening now. So I think to Ryan's point, wherever you put the microscope, you're definitely going to find problems, especially in the world economy that has so much debt. You're inherently going to find something wrong or some sort of weird data violation. So I think there's a lot of merit to what he's saying there.
Yeah, I think it's just the problem with media at the moment where anything that gets clicks is what they're going to promote the most. This China bashing essentially is what's getting the most clicks. So any news on Alibaba will get spun. The Evergrande thing's huge. I think if that was happening somewhere else in the world, of course we'd be paying attention, but not to the extent that we are at the moment.
I think one caveat, sorry to interrupt, Frank, but I think the caveat is like the information is still important, even if it's like a lot of negative. There's still things you can learn there that are potentially important to your portfolio allocation to whatever you're trying to do. So it's not like, oh, the microscopes on China, it's all BS. And it's not really what we're getting at. It's that just take it with a grain of salt. You have to always take any sort of media bias in mind.
Yeah, you have to know what's sensationalized, right? And what's fact.
Exactly. Yeah, how are they spinning that news? There's facts in there that you need to take away and interpret yourself. That's your job as a reader, I guess. But even things like the Common Prosperity donations and things that both Tencent and Alibaba have done, the way that's been reported, even by big companies like Bloomberg, who are fairly respected financial reporters and everything else, it comes across more negative than it actually is. And I don't know. I don't think there's some grand conspiracy behind that. Probably more so just the typical clickbait way media is at the moment. So, you just have to interpret the information in your own way and come to your own conclusions, I guess.
Yeah.
Mm-hmm. And YouTube's not immune to this phenomenon either.
Oh, no.
Alibaba videos get a fair few clicks as well.
Well, often YouTube is downstream of like major media, reacting to major media, or you get your initial facts from some CNBC article, for example. So often they're very tied at the hip.
I should say I'm no better than Bloomberg, because if I do a Q&A, I get one question about Alibaba and it's going in the title.
That's just smart business, Frank. Just smart business.
Look at our title today. We have China, Evergrande, and Baba all in the title.
Wow.
Guilty as charged.
We could have said, like, is China set to explode or something? Like, it's set to go up in flames.
It's only the beginning.
This is,
So a question here from Karthik. Is there a Louis Vuitton equivalent in China? I don't know. Probably what I would do is I would figure out what Terry Smith is buying in China, because he bought Louis Vuitton recently. So that would be where I would take a kind of look under the hood there.
Is the answer to that question Louis Vuitton?
Is Louis Vuitton in China?
Well, I don't
probably.
Know. I'm not sure, but
I'm sure there's at least a lot of
brands in China.
I'm sure there's at least a lot of knockoff brands. I'd imagine.
After Dinner Investor, the Amazon question, if you can say that one, Jack, fairly recent.
Yeah.
If Amazon dropped 30% due to a short-term issue, would you rather sell Chinese tech companies and just own Amazon? Personally, it would be very appealing if Amazon dropped 30%. I would certainly start doing a lot of work, but I wouldn't sell China tech just to own Amazon. I would just become very interested in owning Amazon.
Have you guys ever done a deep dive or sort of valuation work on Amazon?
Not particularly deep, very, very surface
level. I've just looked through a lot of the history. Like I've read through Nick Sleep's letters and some of the work he'd done. And I've also read a lot of Jeff Bezos' early shareholder letters, which are really good as well. There's a letter from, I think it's 2002 or 3. And he's just emphasizing free cash flow per share as their main focus, which is interesting for a company to be doing. I guess people that were reading those shareholder letters might have seen how great of a CEO and capital allocator Jeff Bezos actually was. But other than that, I've done no real valuation around Amazon, at least in recent times anyway.
Yeah, interesting. It's always been one of those ones that I sort of just look at some surface level numbers and immediately get turned off, and that's probably a mistake.
I always see it as kind of like a everything hedge. That's also oversimplification too, but it's like if every other business were to fail, I think Amazon would be near the end and being one of the last to fail. Like, just
seems like
that's just what it feels like. I mean, it's not a very like sophisticated argument, but and as they continue to diversify into kind of tangentially related stuff, groceries, actual physical brick and mortar retail. Ironically, it's kind of like they're further and further encroaching onto everyday life, at least here in the States. So if you're invested in like normal brick and mortar retail, maybe it makes sense to have some Amazon or e-commerce in general as like a hedge, if you want to look at it that way. I'm not saying that's like a good idea, but just food for thought.
Jack, are you a Prime member?
I am. Well, I share.
Yeah, me too. Is Prime in Australia and New Zealand? I have no idea.
It is, but it's not
Amazon's
popular here in Australia.
It's not popular.
Yeah, Amazon's not in New Zealand.
Okay.
Really? You can't order something from Amazon in New Zealand?
Really?
I can order something from Amazon in the US from New Zealand.
Well, I'd imagine logistics would just be way given where their base is. It'd just be a lot more difficult down under. I'd imagine that you'd have to have like a whole new operation. So I'm sure. Well, I don't know, because they're rolling out. Like they're not even like a lot of Caribbean countries, for example, struggle quite a bit. I think Puerto Rico, which is a U.S. territory, even has some issues with Amazon logistics. So, like, you can just kind of extrapolate that into other countries too. But
Australia and probably, well, definitely New Zealand are not really markets that are worth targeting for Amazon. I think it kind of just happens naturally. Like, I don't know, the population, Tom, what is about 5 million in New Zealand? Is that about right? So like, it's at a small city somewhere in the US, except it's located way out in the middle of the Pacific Ocean. And it's hard to get
that's what I'm getting at with the logistics. It's like it's so unless you have like something, it's like along the way somehow, or it's not going to make a lot of sense.
Yeah.
But we shall see long term. What's that?
We don't have snakes though, so that's a bonus.
That's right. There's no poisonous creatures in New Zealand? Is that correct?
Yeah.
No spiders, snakes.
We have one little like white-tailed spider or something. I think you might get a bit of a welt on your arm or something. That's about it.
They must have all got stuck in Australia at some point.
Yeah, I mean,
they didn't make it.
I mean, our national bird can't fly, so there's not many predators going around.
Right.
I was going to say before, New Zealand's just about to get its first Costco, I think, as well. So.
Wow.
We're living in the future.
Wow. Is it going to be close to you, Tom? Like within an hour?
I think it's going in Auckland, so that's getting close to 2 hours for me.
You should film a video from it.
You totally should.
I'll join the stream live one day.
Dude, like go back to your roots. Like you could be right outside of it wearing sunglasses, being like here at the Costco, and then talk about like some Costco story with like Charlie Munger or something. That would be fantastic.
There you go.
Here's a quick. Go ahead, Brad.
So Clayton mentions I would invest in AWS, but margins for Amazon retail are quite low. That's exactly the same thing Terry Smith has said, I think, in the last shareholder meeting. So
yeah, and that's a good observation. It's that's not where the engine for growth is. That's kind of your sort of backbone. Not where the muscle will be.
I was reading a Twitter thread actually about the possibility. I don't think this is actually something Amazon are considering, but spinning off AWS, which would be, I think, would create an interesting opportunity, maybe on both sides, depending how the market kind of reacted to that. But I thought that was interesting because it kind of is its own beast at this point.
Yeah, that would be interesting.
And just because the company's so large, like Amazon is, I don't know, is it 2 trillion, somewhere around that mark?
Yeah, independently, I wonder what you'd have. Any idea on like what AWS would be worth versus the retail arm?
I think it's about 30% of their revenues. So you could say it's worth 800 billion or something, but
the multiple would be much higher.
Yeah, right. Exactly.
Yeah, true. So yeah, it would be worth probably half their business or more.
That could be. I wonder how that would be valued as a spinoff.
It'd be
any IPO in this era would be just like 7 times more than it's probably actually worth. But so maybe now would be a good time to do that.
That would be like the potential biggest ever Joel Greenblatt special situation opportunity. So I feel like everyone would be looking at that.
Oh yeah.
Yep.
And be great content.
YouTube spin from Google would be cool as well. We just had a comment on that.
Mm-hmm. Yeah, that would be cool.
How big is YouTube's really like an AdSense vehicle? It's not really. I don't know how much like YouTube specific income is. I think it's more just like, okay, we put AdSense ads on this website sort of thing. I think that's where a lot of the money comes from. So really AdSense would be the spinoff, I would think. But that kind of is the whole Google model. So when you remove AdSense, you kind of remove everything out of Google.
It's 20 billion in revenue, did you say, Tom?
Yeah. Yeah,
Wow.
Netflix revenue is 25 billion, just FYI.
That's nuts. Still nuts.
According to Google. I assume Google knows their numbers pretty well.
Google greases them up a little bit.
Yeah.
Maybe they suppress them to make it look a little less greedy or something.
I wonder about ad revenue comparing from YouTube versus Google search, what that looks like.
Like YouTube video ads versus like pay-per-click ads.
Yep.
Yeah.
Yep.
I'd imagine pay-per-click is still way higher just because like it's so much traffic.
More direct. Like they exactly what you type in, you're going to get an ad for it. So
that's like what they mastered. Like
yeah,
and no one's even close because of how much traffic they drive. It's also probably different. It's probably different in different parts of the world too, where like YouTube might be more or less popular. There's more creators. Language barriers are a big thing too.
This seems crazy, but it says 104 billion in search and other revenues, whatever that means.
I don't know what the other would be, but that's probably it then. So
but that's
5x.
That's like 5x YouTube.
Yeah, that sounds.
Okay.
I would imagine it would have been much higher. No idea what multiple it'd be, but interesting.
Google's a beast.
All right, let's get like one more question.
Almost 70 live viewers. This is one of our best episodes too.
I think we touched 80 concurrent viewers, which is the most. I think I don't know if we got over 70 once. It might have been our last Baba video. that one I think got this into the 60s. So thanks for turning up, everyone. We appreciate it.
It's the super chats, guys. Everybody's showing up for the super chats.
Enabled, record audience.
Coincidence?
YouTube pushing it because they're like, hey, I don't know what cut YouTube gets of super chats, probably a little bit here and there, but we shall see.
Yeah, and I feel like if Luis has a question, we should probably answer it, but I can't see any coming through.
Yeah, Luis, you got dibs. You have a few seconds before we pick another one.
Luis is just eating popcorn, sitting back, enjoying.
You can't knock him for that. Trying to go back towards the middle. We had some buried in there. Christian here mentions that this stock VET Enterprise Blockchain Solution. And any thoughts on that? I don't know about it, but maybe one to look at.
Never heard of it personally.
Yeah.
All right.
I have to pass on that one.
Speaking of crypto, we get the recent news that China is like banning crypto for like the 100th time. Maybe so they can buy the dip again or something like that.
Oh, James.
Hey.
Yeah. Feeding the boys.
Another questionless super chat. I mean, I'll take it, but thanks,
James.
Good.
It's all good, James. Thank you.
We're eating steak tonight.
Yeah, so Move M asks, where are all the hosts based? I'm in California. So I'm also in California, Move M. Where are you in California? I'm in the San Francisco Bay Area. Where are all you guys coming from?
Chicago.
Chicago.
The good old States as well. So that's a 4-hour flight from Brad or so, something like that.
Yep.
2-hour time zone difference.
That's right.
I'm in a small country town in Australia. New South Wales, Australia. That's the state out in the middle somewhere. Small town.
Okay.
And surrounded by snakes and spiders and angry kangaroos.
Where I work, actually. We get a lot of snakes at the school I work at, actually. So
yes.
We all keep a snake bite kit in every classroom.
Oh, wow.
That's crazy.
It's so normal to us, but I know other people think it's weird.
Have you ever been bitten by a poisonous snake, Frank?
Oh, no. I've only probably seen maybe 10 and never close enough to actually be in danger.
Okay.
What about koalas? You run into many koalas?
I honestly don't think I've ever seen a koala in the wild. I've seen them at like sanctuaries and zoos and things like that, but no, they're pretty rare. You'd have to be staring up in the trees at some odd place to actually find one, I think.
Kangaroos are everywhere though, right?
Oh, they're everywhere. Yep.
Yeah.
They're actually everywhere.
And they're strong. They look like you wouldn't want to pick a fight with a kangaroo.
They pick fights with you.
Have you eaten kangaroo?
Yeah.
Is it good?
Like,
it's sort of like venison, I've heard.
It's like what?
What's it like?
Like buffalo.
Is it like venison? Like deer?
Yeah, I guess so. It just tastes like a really lean steak, probably.
Yeah.
Yeah, there's not anything else really like it, but yeah, probably a real lean steak is the closest thing. But yeah, that sells at all the regular supermarkets here in Australia.
We got a New Zealand super chat right here. Tom, your homie.
There we
go.
This is like we've got like a. Oh yeah, by the way, Tom, where are you from?
Oh yes, I'm from Hamilton, New Zealand, and I actually just googled. So, Jack, how far did you say you are from Brad?
About a 4-hour flight.
Okay, so I'm a mere 14-hour and 15-minute flight from Brad, as a nice reference point for everyone.
Which would mean you're about 18 hours from me, assuming no connections.
There you go.
It would be a connection, though. There are no direct flights from New Zealand to Chicago, I'm pretty sure.
I don't know. There could be. O'Hare International Airport's a huge one. So
you're right.
There could be.
Thank
you, Ben.
He said he likes kangaroos. Oh, kangaroo quite gamey. The New Zealanders eating our national animal over
This really went off the rails here.
You guys got an exporting kangaroo thing going on, huh?
I'm pretty sure it's highly illegal to eat a kiwi, so we got to go to Australia to eat national icon animals.
Oh man, cool. And yes, I am. Well, no, I had fish and chicken last night for the first time. My first animal products in more than a week. So feeling good. I'm feeling strong tonight.
Mm-hmm.
Yeah.
I thought you might have gone for the Warren, like what he has at that steakhouse in Omaha, where he has like the T-bone steak and the double-sided hash browns and a cherry Coke.
I didn't want to go right from green smoothie to T-bone steak. I didn't think that would end well. So
that would have been rough.
Yeah.
Fair call. And go the All Blacks. Yes, we have the All Blacks are playing their 100th game against South Africa tonight.
Wow.
If anyone happens to care about that, I'll be enjoying a punch card brew and watching the All Blacks tonight.
Awesome.
I saw Jason, or After the Investor, was mentioning the UFC earlier on as well. So there's a good fight cut on tomorrow for any interested people out there. My boy Nick Diaz. Oh, Stockton. There we go. He's talking about it now.
There we go. What's everyone else up to for the weekend? Just while we're at it.
Yeah, got a birthday party with some friends tomorrow. Also, going to be cranking out some billables because we got a lot of transactions for October. Got to close.
Our most viewers ever in a live stream, and we're talking what we're doing on the weekend.
Right? Are we trying to blow it, guys?
It's what the people want.
People love it. Put out a survey. What do you guys want to hear? Like personal feelings and life stories.
I feel like
stock information.
I feel like at an hour 10 every week we consistently go off the rails onto
this has been no. We were usually pretty much on questions. We've gone off the rails this time.
Yeah.
Should we bring it back to one question? Maybe.
I just want to know if you're through wedding season, Jack, because you're going to.
I got one more next week. One more. That would be
how many is that?
8 of 8 for the year, and then
unless
we get a random one for the winter, which would be kind of weird.
Wow.
Which I don't think we have any coming up. Then I think we're home free.
I think there's a new one we're all flying to Australia for, isn't there?
Yeah, he's got to schedule that first, or heading over to the UAE too for Qurans.
That's right.
We'd love to. We have a great excuse to have some punch card annual meetings. That would be a lot of fun.
Maybe these super chats are going towards our airfare.
Oh, absolutely. It better be.
You know what's always a funny thing? Like I've met a couple people from YouTube and stuff in real life before, and it's always surprising. Like this is gonna sound real random, but it's always surprising like how tall or short people are. Like you never get a feel.
Right.
I've been wondering that for you guys. I've been wondering that for you guys.
Should we give out our height and weight stats?
I'd be fine with that. I see. I picture Quran being super tall, like real tall, like 6'4", sort of thing. Well, I don't know.
Brad being really tall.
Yeah,
I want to wait and see. I want to really just not know and just be surprised. That sounds fun to me.
I reckon Brad's 6'9", 250.
Oh my gosh! I better start working out, guys.
There's a couple of boys in the chat. So talking about Nick Diaz versus Lawler. He asked who I think would win. I'm going my boy Nick Diaz, but I don't think he will win. That's who I want to win. I think Lawler's probably got him.
And
with that boys watch UFC?
With that bit of UFC, shall we?
Let's do it.
Up?
Israel Adesanya actually just said he's never going to fight in New Zealand again.
There you go. The one UFC fighter just because he's from your hometown.
Yeah, well, because when you come back to New Zealand, you got to quarantine for 2 weeks, and I think they'd been giving certain sports teams like a bit of leeway on those rules, but they weren't giving that to the UFC fighters, is my understanding. So that upset poor Izzy.
Yeah, he was not happy.
Yeah. Anyway, that's enough.
Jack, take us away.
No, we'll wrap up on some UFC current events. Now, we really went around the world here, guys. We started in China, then we went to wherever each of us lives, and then we went to UFC news. Like, we covered it all, and we talked about the gaminess of kangaroo meat. Like we got everything in this episode. So thank you all.
Many words for the channel in there. Many keywords, and
also huge milestones. We got our first super chats. That's a lot of fun. Thank you to everyone who did that. We got 4 people in there, didn't we?
Yep.
Which is fantastic. Clayton has the honors of being the very first one, forever enshrined. So thank you. That's all I got. If you guys like this video, whether you like the actual informative part or if you like the fun part, or maybe it's all fun for you, in that case, definitely leave a like on the video and be sure to subscribe so you don't miss next week's episode, since we'll do a new one every week. I think next week we'll probably get to the topic that we thought we were going to do this week, which is what if you had to have one company be 100% of your portfolio? That one that Karthik in the chat proposed. We liked that prompt a lot. We were going to do it, but with all this news that came out of China, it just seemed appropriate to do an episode talking a little bit more about those issues. So anyways, with that said, check out the Discord in the description below, where people are talking about China a lot in there too, and other value investing stuff. Join that. That is free. And we also have the merch shop down there too, if you want to pick up some punch card merch, like this punch card brew pint glass that Karan designed. So anyways, with that said, till next time, take care, everyone.